Are you thinking about buying your first rental property? There's a lot of questions, sometimes confusion, and even doubt about how to buy rental property and building a real estate portfolio. Some of you might think this is an extremely difficult feat to come by to own multiple properties. But in this video, I wanted to give you the step-by-step on how you can purchase your first rental property. Many things to consider when you are thinking about buying your first rental property, but I want to give you a sort of cheat sheet as to what you can think about to help you buy your first rental. Now, one of the first things that you want to think about is the location. There are so many places that you could think about buying a rental property, whether you're buying a home in your backyard, whether you're buying a home locally in the city that you currently live in, or if you're thinking about doing long distance investing, where you're buying a home in another part of the country. Now, why the location is such an important part, because it's going to really give you an idea as to how to set up your investment strategies to be able to purchase. For example, there are two ways that you can benefit from owning rental real estate. One through appreciation, and the other is through cash flow. Now, if you are looking to buy for appreciation, you are typically buying in higher cost cities. For example, like California or Florida or even Hawaii. In those states, you might see higher rates of appreciation than other parts of the country. Now, the tough part about that is you are buying in these higher priced areas. Like Hawaii, for example, you might be looking at homes that are $800,000 to $1 million. Same thing with California, as well as Florida. Now, those are hot destinations, hot markets. So you can definitely expect to see lots of appreciation out there. However, you may not get the flip side, which is the cash flow. Now, if you're looking to buy for cash flow, you might be looking in secondary or tertiary markets, like more in the Midwest or a little more inland. Now, I like to buy for cash flow. I know that the appreciation will come eventually, but I'm not overly concerned about getting massive amounts of appreciation on these properties. I would prefer to own something, earn the cash flow, and let my tenant essentially pay the house off for me, because at the end of the day, all the properties that I'm purchasing, I'm essentially buying them to leave them to my daughter. So by the time she gets old enough, the houses will be paid off and the mortgages won't even play a factor for her at this point. So that's my strategy, but you need to decide for yourself. Would you rather go for appreciation or would you rather go for cash flow? That's going to determine the location that you're going to be looking to focus in and figure out how are you going to acquire homes in that specific market. Financing, or paying cash, or maybe even a hard money lender. So there's a number of ways that you can purchase rental real estate. The most common thing, our clients are using us for financing. So one of the things that you want to make sure, like we talk about in every single one of our videos, is to get pre-approved. I think more than ever, it's really important when you're buying rental real estate, because you need to know what that mortgage payment is going to look like. Because if you don't know what the mortgage payment is going to look like, you can't figure out your cash flow, or you can't figure out any of your numbers that you're going to need to know to figure out whether or not that house is worth buying or not. So getting pre-approved in this situation is even more important, because you have to have a solid foundation as to what you're going to be basing your purchase on. Oh, and by the way, my name is seanu Uyehara with Loan Depot, and it wasn't too long ago that I was just like you, trying to buy my first property or even my first rental property in this crazy market. And you know what? It's not that easy, but this is why I created my YouTube channel, to help you purchase your first home or even your first rental property. So make sure to click that subscribe button and you'll be on your way. Now let's get back into the video. Now remember, when you're looking to get pre-approved, here's a list of the basic documents that you would want to have handy for your mortgage lender. You always want to have 1 month of pay stubs, 2 years of W-2 forms, and 2 years of tax returns. You get 1099 forms as well. You want to include those as part of your documentation, and also 2 months of bank statement. We need to see where the funds for your down payment's coming from. Now, it could come from a retirement account. It could come from your checking or savings, or maybe you're selling a property or selling vehicles or anything else that could potentially raise capital for you to make this purchase. Now, keep in mind, when you are looking to buy an investment property, you want to put at least 25% down. So again, going back to the first point, figuring out where the location is, The location is going to give you a rough idea as to what your purchase price will be, which will then determine how much money you should have saved up for your down payment. Now, again, my rule of thumb is always 25% down. Could you do less? Yes, you could. But again, that could potentially hurt your cash flow, might give you a higher interest rate. So to me, it's not necessarily the best decision to do that unless you're looking at maybe short-term financing and you've got the cash to essentially pay the loan off. Now, when you're getting pre-approved, one of the cool things about owning real estate is that if you own other property, we can actually use the future rent of the investment property that you're looking to buy to offset the mortgage payment. How cool is that? This is one of the things that so many people miss when they look at buying rental real estate, because they think that they have to qualify for the full rental amount. Now, in some cases you do, but if you already own other properties, we can actually use that future rent. So for most people, you're only qualifying for maybe a couple $100s worth of mortgage, if that at all. That's why owning rental real estate is really not that difficult. You just have to get with a lender that knows how to structure your file, so that way they can help you get your financing. Now, when your lender's pre-approving you, make sure that they give you the full amount of your mortgage payment. The PITI payment is what you really want to look for. Don't take any shortcuts, because you have to factor in your homeowner's insurance, you have to factor in your property taxes, as well as an HOA if you have an HOA in your area, because again, all those numbers will factor in as to what your cash flow is. So as you're talking to your mortgage lender, another tip that I can give you is start shopping around for your homeowner's insurance. Now, when I bought my rental properties, I tried to go through the same carrier that I have my policy on my primary resident. Unfortunately, they didn't cover the city that I was looking to purchase in. So I had to resort to going down the line of basically the bigger insurance carriers like State Farm, and just finding out what their premiums were. So I had a general idea of what the house was going to be when I purchased. So I gave them all that information so I could start kind of figuring out what the insurance premium is going to be to work my numbers. Now, I still padded my numbers probably another 10% based on what I thought the annual premium was going to be. I had enough of a buffer, so if the cash flow still worked with that extra buffer, I was okay with purchasing the home. If you don't have a recommendation as to who you could use for your insurance, that's also another thing that you could talk to your mortgage lender about, seeing who they normally work with. And that's why it's also helpful if you work with someone who's an expert in the city, because they'll have other relationships that they can refer you to, someone as far as who can help you with the homeowner's insurance. That's also an advantage, like I said, of working with a local lender. Now, make sure that you're also factoring in your property taxes. Now, sometimes your mortgage loan officer might actually get cheap with you on these estimates, because they might think that you're gonna shop around and you're gonna go somewhere else and use someone else for lending. This is why it's so important to establish a relationship. Is the last thing you'd want to do is have your lender shortchange your property taxes or any of these estimates just to make them look a little bit better, so you don't shop them, only for you to find out that they were completely off with their taxes. Now, as you're looking at property, don't forget, you can always go to the county tax assessor site for whatever city you're looking to purchase in, and you can verify the property taxes yourself. That way you can run your estimates. And again, I'd always put a buffer on it, just so that way you're taking into account any shortchangings that maybe the lender may have done, or maybe if the tax hasn't been updated for whatever reason. And don't forget, as you're looking in your certain city, make sure to find out if there's an HOA or any added assessment fees that you might be charged. In Las Vegas, for example, it's very common to have HOA. And sometimes there's even special improvement district taxes, which you might not be completely aware of. So get familiar with the city that you're looking to purchase, because you don't want to underestimate some of these HOA fees, because I've seen some of them range from $50 to maybe even a couple $100s a month, depending on the location and also depending on the property that you're purchasing. So now that you've got your location, you've got your lender, you've even got your homeowner's insurance agent that you're planning to work with, and your lender's got you pre-approved, you've got your hard numbers to work off of, you can start shopping for a home. This is the exciting part. You've done a lot of the legwork. Now you can start looking at properties. This is where I feel having a great real estate agent who understands investing can really help you out here. Now, some agents don't own rental property. To me, could you still work with them? Yeah, you could, but they're going to look at the home a little differently than an investor would. I would try to find a real estate agent who actually owns rental property. That way they know how to best help you be successful in that market. If you're working with a realtor that rents and doesn't even own a home, do they truly know how to calculate the cash flow to help you get into the right property? There's a lot of things that they might miss. You just need to make sure that you're the one that's going to be doing all the heavy lifting, and essentially they'll just be showing you properties. I personally like to work with an agent who has an investing background. It does help me go through these properties because there may be things that I might not be looking at that they would essentially consider or point out to me because they have a mind like an investor. That's also important to me because I have to have that trust with that person that I'm looking to purchase, because essentially if that home is a benefit to me and it is going to work out, I would definitely buy more than one home. So again, back to the relationship part. That's why I always talk about this, because you want to work with people that you would essentially want to do business with over and over again. Because if you can buy one rental property and let's say you're making $300, $400, $500 a month, and if you have the disposable income, you would definitely look at purchasing more rental property. Why stop there if you can continue to buy? Now, as you're looking at your properties, the other key piece to this entire rental purchase is going to be your property manager. If you're looking to purchase a home in the same city you live in, you might choose to manage this home yourself, which is totally fine, depending on how much time you have and how much of the headache you'd like to deal with. I can tell you owning several properties, even with a property manager, it's still a headache. Every single month, I feel like I'm dealing with something with the property manager or the tenant. I prefer to work with the property manager. They charge anywhere from 8 to 10%, depending on how many properties you own and just depending on what their overall fee structure is. So make sure you start interviewing those property managers to, again, build a relationship. Don't just go based off of who's the cheapest. Because again, if you're getting someone who's going to charge you 5% or 4% or 6% as far as their management fees, are you really going to get the service that you're looking for? Are they going to be screening the tenants like they should? How responsive are they to the tenants' requests for repairs? There's so many things that are going to come up that could literally be total headaches. The 10% fee that they charge is totally worth it. Some great questions to ask your property manager is pretty obvious. How long have you been in business? How many properties do you own? And also, what is their fee structure? Look at their reviews online. How to find a great property manager. One source you could definitely ask is your lender. Again, if your lender is also an investor, it makes it a lot easier because they may have contacts as to who they've dealt with throughout their career, that they may have a local property manager that they work with. You could also ask your real estate agent. This is why I like a realtor who has an investing background, because they may also have a local property manager that they could refer to you as well. If not, you could check out social media, Yelp, and just Google search and look up their own reviews and see what people talk about them online. Some of the things that I can truly appreciate from my property manager is responsiveness. If I have questions about an invoice or the billing, or even if the tenant's not paying, I want an answer now. I don't want to wait. So to me, having someone who's responsive is super important. You also want to make sure that they're doing a good job of screening the tenants and find out what type of criteria do they look for, because those are the headaches that literally will cost you thousands of dollars on the back end if you don't do a good job of screening the tenants up front. And the last thing you'd want to do is put a tenant into your home, they move in, not pay rent, and now they're going to tear up the house, and it's going to cost you thousands of dollars for literally nothing but a headache. That's why screening them up front, having a great property manager that has great principles and a great strategy as to how they're going to screen the tenants and market your property is super important and something you should definitely look for. Now, if you wanted to take it a step further and now even look at asset protection, which a lot of my clients look at doing, and even myself, you want to look at an asset protection attorney, someone that can help you strategize as to how you can purchase these homes, put them into LLCs so that way you can protect yourself as the landlord. There's a lot of things that can come up while owning a home. I would definitely recommend talking to an attorney just to see what are some of the things that could potentially come up. That way you can avoid them. And if you have the money and you want to make the investment, I would definitely recommend hiring an attorney to draft and help you with your LLC structure and how you can protect yourself as an investor. Because the last thing that you'd want to do is put all this hard work into buying these properties, to have tenants essentially sue you or something happen to the property where, again, now it's costing you tens of thousands of dollars, which could potentially have been avoided. Which actually makes me think of this story. I actually had a real estate agent that I spoke to once, and she owned some rental property in her city. And she had actually told me that she was doing some work at one of her rental properties on the roof, and the roofer had actually fallen and gotten hurt. The guy had actually sued her, and she was actually in this lawsuit for over a year, I believe. And she essentially was writing off all of her income because she was literally about to file bankruptcy, because she didn't have the house in an LLC. She didn't have the insurance or any sort of liability coverage that she should have had when she purchased that home. So she literally had costed herself tens of thousands of dollars, because she probably took a few shortcuts when she bought that property, or she was just unaware. Now, I know sometimes with these policies, it may seem like overkill, but I think it's always like anything else. When you're in the heat of the moment and something happens, you're probably gonna wish that you had the policy when you look at the nominal costs or the fees that actually go along with it. So I'd rather be safe than sorry. And that's just my 2 cents when it comes to the whole liability structure. But again, make sure you talk to an attorney, at least get their opinion, and then you can decide for yourself if it's worth the investment, or maybe you do without it for the first few years, and then you can decide on what you want to do once your home is maybe cash flowing for yourself. Those are really the key players that will help you buy your first rental property. So you've got your property manager, your real estate agent, your lender, homeowner's insurance agent, and maybe even an asset protection attorney. Those are the key pieces to help you buy your first rental property. Now, given you may not need all of them to get you through your first one, but those 5 people can help you get across the finish line to buy your first home. I hope this video helps you understand that buying your first rental property isn't as tough as you think it is. But if you still have questions, don't forget, you can always check out my playlist to learn more about how to get your mortgage right, and I'll see you on the next video.